Good morning, traders. Richard here doing a quick NASDAQ 100 Ichimoku cloud chart market review. We can see we had a fantastic little rebound from old cloud chart support levels. You can see if you scroll back here, this cluster of April last year's support zones came back into play. Now we need to see a follow through of this rally today and this week. See if we're going to get back up to the resistance zones, which is now the bottom end of the cloud levels here. Key levels to watch out for on the resistance side would be this zone here at the front end of the cloud at 14,132. So this is the upside resistance targets. The other one is the bottom end of the cloud here. Will be interesting to see if we're going to get through that zone. These are the two upside resistance targets if support holds at this level. But do realize that price action below the cloud is bearish. We have a bear market going on at the moment. The major cloud chart sell signal was here at 16,000 in the market, as well as another cloud cross signal there at 15,600. So the long-term picture looks rather bleak from an Ichimoku cloud chart perspective. We now have swing trade opportunities, but the long-term sell signal remains in place. If we look at the weekly chart, you can see there price action below the cloud. That confirms the bearish outlook. For the bull market to resume, we need to be back above the bottom end of the cloud. So there's only swing trade rebounds now, trades from this cloud chart support zone back up to the bottom end of the cloud, and the bottom end cloud chart resistance zone. The other level to watch out for is this zone here, so 11,4191, 14,491, sorry. So these are the upside resistance targets on the weekly. Now, if we just look at the monthly, you can see how extended this market is. It's now lost support at the front end of the cloud, and there is a downside risk towards this standard line of the cloud, as well as the front end of the cloud, 11,329, as well as 12,000. So these are the downside risk targets on the monthly. And if we look at the quarterly, you can also see how extended the market is here. The two support levels here for long term is 11,200, and the standard line and the turning line of the cloud. These are the downside risk targets. But the 99 bubble looks rather small compared to this one. So this conspicuous consumption bubble is slowly deflating. And if we look at the yearly, practically vertical, and there's this mark is bound to correct further, as we can see. But price action is below the cloud on the weekly. That's bearish. We really need to see regain back above the bottom end of the cloud here, but we do have potential for a swing trade back up to these resistance targets on the weekly, as well as the daily back up to the bottom end of the cloud in an overall bearish trend. If we look at the 4-hour chart, you can see there we're going to close this mean reversion gap here. So watch out for the first resistance zone is the front end of the cloud here at 13,313, as well as the standard line of the cloud there at 13,496, and then we get this 14,132 bottom end cloud chart resistance zone. So that is the scenario. We can get a little bit of a relief rally after this selling. But do remember, the really big picture is the market's incredibly extended, and the weekly chart does show that we're in bearish territory on the weekly Ichimoku cloud. Until next time, happy cloud chart trading. Bye for now.